Hello traders, what's going on? In the previous lecture, I have explained the basic formation and characteristics of double top chart pattern on a price action chart. Double top is frequently used in forex and equity market as bearish signals. From this lecture on, we will learn another strong chart pattern, that is a double bottom chart pattern. So in this lecture today, I am going to tell you about the basic formation and characteristics of double bottom on a price action chart. Double bottom pattern are essentially the opposite of double top pattern. A double bottom is a bullish reversal pattern that appears on a price action chart. The double bottom pattern is identified by two lows that are roughly equal in price and separated by a high in the middle. The double bottom is frequently used in the forex and equity market as bullish signals. As you can see the chart, when the price drops for an extended amount of time and then bottom and swing low are formed while price hit the certain support level. When price drop for a certain period of time and then price hit a support line and price has rejected and first bottom is confirmed. And after rejection, price rises up for certain period of time and then market tested the new resistance at the neckline and then price again rejected. After rejection, price has fall down again for retest the previous support level. Here second bottom is confirmed. Price again rejected and rises up for retesting the previous resistance, and you will be sure that pattern is confirmed. While price hit the resistance level, then chances is high price break the resistance. At this moment you will wait for the breakout. When price break the resistance level, then you will be place a long trade entry with current candle closing and set the stop loss at least 3 pips below the higher low and set the target profit at least twice size of stop loss. As you can see the real chart example, that is the GBP USD 1 hour chart. Double bottom pattern are essentially the opposite of double top pattern. You will notice that price drop to the first low has been absorbed and then buyer taken control pushing the middle high, that means established neckline. And then price drop the second low, the buyer step back in the pushing price rises up. That means you will be sure that pattern is confirmed. In this moment you will wait for breakout. When the price break the resistance level, then you will be place a long trade entry with current candle closing and set the stop loss at least 3 pips below the higher low and set the initial profit target at least twice size of stop loss. So not more today. Have a nice day. Goodbye.